Welcome everybody to this video. In today's video, I'm going to share some of my personal informations considering the trading markets. I do have 13 years in the financial markets trading the Forex, Saudi Arabian stocks, and also I do trade cryptocurrencies for some, let's say, some fun only. Anyways, I used to have an Arabic channel on YouTube, and many friends, Arabic speakers, they suggest to me to go international. So I would love to share the informations with you, the experience which I do have in this, you can say, almost 13 years. And there is a lot of mistakes, many, just not just crypto community, but even the professional traders, also the professional traders. Anyways, we have to start by some important information. Many people, you can say YouTubers or some Twitter accounts, Instagram, they do have some abilities to share the ideas where the market is going. And this is not very important, because the very important thing is being a trader. Being a trader is very different than being an analyst. Because if you are an analyst and you will succeed, for example, to identify the markets, okay, you can say you have ability to get the markets into the right way or not. It is not your business at the end of time. Being professional analysts is very different than being professional trader. In this video, you will understand why. So, you need to take a step to be a professional trader by simply understand the way markets or the way the markets works. Also, I apologize if I do commit in this video in the future some of the English mistakes, because English is not my second language. I am a Moroccan and I do not speak English in my daily life. I do speak Arabic and French, but I'm trying my best so my message can be delivered in the right way. So I apologize if any grammar mistakes or any English vocabulary mistakes. Hope you understand that. Anyways, being an analyst, like I said, it's something that everybody can be. You can put any tools that some websites or some platforms provide for you, like Fibonacci levels, like any other tools you can use to forecast the markets or to get provisions for the future. But like I said, as a trader, it doesn't matter to understand what the market is actually going, where and why. All you need is to make money. We don't need Bitcoin to be at some high levels, okay? Because many people will not jump into the bull run because they don't get the conclusions of being traders. Being a trader is something very different, like I said. So let's go back to teach you, or at least to reveal some ideas why the being analyst is very different than being a trader. As you can see here, we have a candle. We can say closed at the 19,000. Okay, what is the step you will take after the candle is closed? Now you have to choose. You have to choose buy or sell. In 2017, we don't have some margin companies like BitMEX, and maybe I don't know if it exists in 2017, but I didn't have the informations. But many people who supports or likes cryptocurrencies or want to trade cryptocurrencies, they bought at this on some level and they sell it in the markets when the market achieves some higher heights. Anyways, in this candle you have two choices, because you don't know what's the future can hide for you, and there is nobody, especially if you are an analyst, there is nobody knows where the market actually is going. But there is some important things like the trends, like for example some Fibonacci levels and something you can use as a trader. But at the end of time, You need to understand that the decision accepts two conclusions: buy or sell. So what are you going to do here? You will say, okay, I'm going to short or I'm going to exit, because you know already, you saw the chart. But let's say, for example, it's your first time to go into this candle here. Simply, if you are going to short, then why? If you are going to buy, then why? Both of the answers will be just a prevision. It is just 50%. It's 50%, nothing. So all we need now is simply some philosophy or some ideas how to get or how to hike the probability of gain, so we can get into the right decision or get into the right trend. Okay, the first advice I have for you: do never buy when you see the bull run, without just a condition I'm going to reveal for you now. Okay, simply, if you do this, I promise you will understand how the market psychology works. Whatever is Bitcoin, Ethereum, whatever. So the answer is simply no buy, no sell. We get into the high price this candle achieves. Okay, and we place a line. Okay, we place a line. Why the highs? Because the highs represent a resistance in the time frame below the weekly chart. So we're talking about a resistance, or the last resistance the people or the traders will think to buy or to short. So we talk about weekly. So the resistance is in the daily or in the 4-hour chart. There is nothing more. So here, if we get above this level here, then you have 50% that the markets will continue to go up. Okay, we have sometimes more than 50%. If no, then you don't have to buy Bitcoin. Okay, it's very simple. I know many of you use Bollinger Bands, moving averages, some tools, like I said, but trust me, being a trader is something different, and that's why they don't to reveal this for you. Okay, so let's go back to work. What happens to the next week? And next week, a candle appears here. This candle, by the way, has a name called bearish engulfing. Some of the analysts called it hanging man, but the hanging man actually is when the price goes or engulfs the previous candle for almost the 0.2061 in Fibonacci levels. So you bring Fibonacci levels like this way. Okay, you get it like this by simply tracing the high or the low of the candles. So if we cross the 0.61, okay, so probably we have a hanging man. As long as we are below the 1 of Fibonacci level, we are in bearish engulfing candle. Everything till now is clear. So what next? Are we going to buy or are we going to short? Buying Bitcoin, as long as we are below the $20,000, is something very risky. I'm bullish if the market goes above. And by the way, you can go back to the chart. You can get the same ideas or the same philosophy I'm teaching you right now, and you will understand that the market's actually working like this way. So let's follow what these miracles teach for us or appears for us. We have another signal here. This is called the lower highs. So we have the first high and the second high. Okay? How do we identify the highs? It's simply when a high gets into a level and then we failed So we create another high and we failed again. So the second failure called another lower high. It's very simple. So what are we going to do next is using the horizontal ray, okay, this way, and then we follow the market psychology where it's going to be achieved. We broke below the middle line in the Bollinger Band. You can use indicators, especially the trend filters like moving averages and Bollinger Bands. Okay, till now everything is clear. So here we have another bearish signal. I will not buy Bitcoin. If you make scalping, it's okay. But here I'm talking about hodling Bitcoin. I'm talking about long term, because each of these candles represents 1 week. Okay, I'm not talking about scalping. If you want scalping, we can discuss some other strategies by only opening the 4-hour chart. Okay, the 4-hour chart is the only credible charts you can use scalping. Below the 4-hour chart, you are gambling, whatever is your strategy. So back to work. What happens? Now we have a significant point here, shows another professional, another full lower high. Okay, so we have the high here. Let me change the color so you can see it. And we have the second signal here. So if you are thinking to buy Bitcoin, it's okay. But how? We should first break higher than this level. Okay, higher than this level by at least 5% above. Okay, you can say 30,000. Okay, the 13,000. It's a signal to buy Bitcoin if the price goes above. If no, then we are below. Especially if you bought Bitcoins at these levels here, then probably you deserve to get lost. You deserve to get lost because simply you have the first signal, the second, and the third. Okay, and also we have another significant point here. If we continue below this price, then there is a probability that the market will go more than a bearish. Why? Because this is the lower price of the Bitcoin we had after the high. So we had a high and we had a lows. So probably this is what we called in Elliott waves. We call the corrective wave. Okay, the corrective wave. So this is her head and her legs. Okay, the break below, it's an important message that the market will continue to go down. Crossing above, it's something different. Then we talk about bullish sides. But this is not the end of the world. I will not wait till the price goes above the 20,000. No, we are going to just simply use some market conditions in order to get into the right way. That's very simple. So what happened next? The market continues to some kind of volatility, and it failed to create another bullish signals. Okay, I remember many people were looking at the charts and thinking that there is some kind of triangles here, and it is a bullish reversal patterns, and I do laugh for them, to be honest, because we have the push from the 20,000 and we have the lows, so we still and inside the wave. When the traders or when the market actually trades inside what we call the corrective wave, so you have to be careful. That's the professional traders, and we call whales. Some of you call the waves with the big amount of money. I don't know. These guys simply works like this way. They don't buy Bitcoin at some levels. They buy Bitcoin when there is a signal. Okay, when we see something deserves to buy, and they never trade without breakouts. Trade the breakouts, and remember me, you will achieve something you will never dream or you will get in your dreams. Something very simple. trade the breakouts only. But identifying the highs and the lows, it's something you need to focus on, because we do not trade any highs or any lows. No, we trade the most important waves, like the impulsive one and the corrective one. So what happens next? This is the first signal. For me, this is the first signal. So that's why I'm using the moving average. The breaking of the price below the moving average 100 or the 200 allows you to follow the next moves at the next moving average, or the down or the below moving average. So here at this level we have moving average. Okay, we have a moving average. And by the way, I don't care where the market is going. Okay, it is not my business to markets to go to 1,000 or $10. I don't care. All I care about is there a signal? Because Bitcoin is not my father's legacy. It's a commodity. It's a cryptocurrency. We can buy it. It's anything. Okay, I know the value of cryptocurrencies, and Bitcoin is something reversion. It's a revolution, and it's something we can respect. But as a trader, you need to think and focus like this. You need to change your mind, change your mindset. Okay, change your mindset. Think like this. You don't care. Don't care about where the market is going. Care about where to buy and where to exit if the market goes against what you have in your chart. So I think the moving average here will be another support. If we failed and we break below this, then probably the market will be more than we can achieve a lot of lower highs. Okay, so what happens? Okay, we stop here. Why do you stop here? Simply, we have a bullish engulfing. Okay, we have a bullish engulfing. Bullish engulfing is a reversal candle. The bearish engulfing, the bullish engulfing, the hammer, okay, and the shooting star. These 4 candlesticks you need to write down in your agenda. You need to write down in your notebook. Because if you're trading these 4 patterns, no one in the markets will mock you, and I promise you will get into the right way to join the 5% of the traders in the world. And I remember the same situations happens to me when I was trading the Saudi Arabian stocks. Anyways, this is not about stocks, but it is about crypto. By the way, I'm a big fan of crypto and I do trade crypto. So that's why I want to reveal the secrets for you. So what happens next? We have a bullish engulfing here. How do we trade bullish engulfing? Simply, okay, we can trade the closes and the highs. If we have a highs here, okay, you can fill an order 5% higher than the high of the bullish engulfing. Okay, 5%. So at 4,400. 4,400. So what are we going to do next? Are we going to buy or not? If we break above this level, okay, and the price will continue to go into the bull side, then probably we can have, or we can get another bull run. If no, thank you very much. A break below the high of the candle of the bullish engulfing will be a significant point to get another entry point. When are we going to say buy bullish engulfing? Not buy in, but buy. Simply by breaking below the lows of the moving average and the bullish engulfing itself. Okay. It's very simple. As long as we have the bullish engulfing, maybe the whales can trade in this inside the bullish engulfing, but a breakout higher will shows another levels. How can we identify the levels? Simply by using Fibonacci levels. Okay, like this. Nothing else, nothing more. So let's say we have the 1.61 as a target. Is it okay? Okay. You have the moving average, bullish engulfing, and you have another second bullish. Sorry, you have another second moving average. So it's a bullish signal. Let's see what happens next. Another bullish engulfing from the 0.23 Fibonacci, and a fake. This is a fake, what we called bearish engulfing. Why? Because if it was through a bearish engulfing, it should, or it must, not it should, it must engulf the bullish engulfing and cancel it from the markets. It's okay. Then we can say we are in the bearish signal. But even this happens, your order is here. Okay, your order is, so you're 100% protected, because whales or some exchanges, they know where you put your order to buy Bitcoin or any other cryptocurrencies. So let's see what happened next. Simply when we have the breakup. Okay, the market breaks the supports, your order failed successfully. We touched the first targets. Let's see how the market acts on these levels. If the market acts on something like any, let's say, any small bearish candles or something like this, or any, for example, long wicks or something like this, then probably your levels is 100% true. As you can see here, the price continues to touch any of the Fibonacci levels, and then we continues and we break the support here, failure support, and we have another bull run. So by this level, as long as you don't have any of the bearish signals, then you are in the markets. Okay, so how much we made from this, let's say, impulsive wave? Okay, around 100%, more than 100%. Okay, more than 100%. And we can stop at this candle if you want. Okay, you can stop at this candle. If no, then you can let the market goes and you are in. So what I'm going to do next, okay, I'm going to say what the market will behave in these levels. So we have another bearish signal. Okay, it's not so powerful, but we have to respect any candles appears in the levels. What next? We break up above. So okay, like I said, it's the same story for the $20,000 in the previous chart I saw you. Okay, it's the same. So another breakup. Okay, there is no problem. Then what happens next? What happens next? We have another significant candle. It's a reversal candle called shooting star. How do I trade this? Simply the same strategy I told you, or I teach you this lesson. As long as we are below this price, there is problems. Okay, as long as we are below this candle, we are in troubles. A breakup higher than this candle, then okay, we're okay. So let's see what happens. Did the markets actually breaks higher than this level? No. So what is the next story when this candle appears? Simply we have another bearish signal, and then whatever the market takes as a bullish side, the bears slaps them and gets them to capitulate. So okay, another signal of touching the moving average. Okay, and what I have to do now is simply like this: bring the Fibonacci and then trace it like this way. You have the 0.61 Fibonacci. Thank you, Mr. Fibonacci. Now you can go. So as long as we didn't break higher than this level, okay, we can be in danger. We have the first signal and the second signal. Why the 0.61? The 0.61 represents, simply represents the maximum of the impulsive wave, okay, to be corrective. If a wave touched this level here and goes back to follow the bearish side or continue to the bearish side, then 100% we have a bearish signal. If we cross above, then okay. Till now, everything is clear. Even if you trade the moving averages, some people make their stop loss below and they can go for some dollars. There is no problem. As long, like I said, if you to respect your strategy, where to enter and where to exit, because a lot of people bought Bitcoin in the random way. Okay, they bought Bitcoin in the random way. Okay, see some bullish candle, okay, go for Bitcoin. Bearish candle, sell Bitcoin. Things doesn't go like this. Let's see what happens next. I don't really know what happens next. Okay, as you can see here, the price starts to drop. This drop here, many people call it a random action. Is it a random action? Let's see. I don't know if you can see the colors here. Okay, let me switch it to the white colors. I think everything is clear now. Okay. You see here that's the 0.39, okay, the 0.39 represents another Fibonacci resistances. So you must respect every level, and the break up or the break higher than any level will go straight to the next level. For example, if we break higher than this, then we can go to 0.5 and it's okay. For me, the 0.61, as long as we are below this level, then probably we are in trouble. Till now, Bitcoin is about to surrender. So how can I trade now the markets? Simply, it's something not so strange, something not very difficult. All you have to do is simply waiting for the break higher than the 77,000. Okay, it's very simple. Here you can see that the market is trying to close higher than the Fibonacci level and also closing higher than the moving average. So I'm going to do a simple way. If we break at this level, then probably we can visit the 0.61. Okay, the 0.61. 0.61 represents also the middle line of the Bollinger Band. Okay, it's something very simple. Why did you choose the 7,700? Because it represents another level of the moving averages. It's very simple. So what next for the Bitcoin? Let me clean the charts. Okay, it's very simple. We have a candle here, okay, and we have another fake hammer here. So a close below this level will helps the traders to short Bitcoin all the way to the 5,000. Okay, the 5,000. Some of the people will say, how can you identify the 5,000 without the moving average? We have a lot of tools, but in my career, I do use Fibonacci and I do rely on Fibonacci. So like this way, okay, you can say that we have the first level here, 1.61, and we have the two Fibonacci. So 5,500 and then the two of the Fibonacci level, which is on the $5,000. Nothing more than that. And the market psychology works this way. You need to open your mind. You need to open your mind and focus, and you need to change the way you trade the markets. Many crypto analysts on YouTube, they trade on some small time frames, like the 4 hour, like the 1 hour. Trust me, you will not achieve the big image. If you don't have the big image, then probably you will be inside some corrective wave which can be positive, and then you will think that Bitcoin is okay, it's positive, we can buy Bitcoin. No, you need to have the big image. You must be like a drone. You need to check the place from the sky. Then after, you can land and you can check it like the way you want. So here we go. This is the lesson. Please, if you like the content, subscribe to my channel, support me, click on like button. And what do you think about the lesson of today? Do you want more lessons like this? I will also try to upload some of the market analysis every day, so I can help you to get the point of view. For the second time, sorry for my non-professional English, but I think the message is very clear. You can repeat the video if something is not, if you don't understand or something is not clear for you. It's something I can do in the future, in the near future. I can improve my English vocabulary and also improve my English grammar. Here we go. Thank you for watching. Don't forget, please, to like the video. Like I said, subscribe if you like this content. If you agree about being a trader, not being just a simple analyst. Thank you again. See you.